These are the 5 best AI stocks to own in 2025. And I looked at the 5 biggest AI sectors in the economy and then chose the very best AI stock with the most potential. And those 5 sectors are cybersecurity, financials, software, healthcare, and robotics. And the first stock is from the sector cybersecurity. And this stock is relatively pretty small compared to the big dogs like CrowdStrike and Palo Alto. And because of that, it has a lot of room to grow their market share. And the stock is called SentinelOne. And this company uses AI and machine learning to protect devices, cloud, workloads, and networks. The company is not profitable right now, but their price to sales ratio is around 6, which is a lot cheaper compared to other cybersecurity companies. And the crazy thing is that they will be growing their revenue 20% and their EPS 200%. For only a price to sales ratio of 6 in the cybersecurity sector is insanely cheap. And it looks like analysts got the exact same opinion. They're expecting that the stock price will surge 35% and in bullish cases even 112%. And you can just look at the earnings forecast, it's just up and to the right. And the same counts for the EPS. The competitive edge of this company is that they charge much less compared to big companies like CrowdStrike, because they don't need a massive workforce to handle the cybersecurity. And because of its AI-powered decision making, it can run on much lower cost, which is really attractive to small and mid-sized companies that don't want to spend a ton of money on cybersecurity. So this stock is a great option if you want to expose your portfolio to more cybersecurity combined with AI. The AI stock number 2 is from the financial sector, and this fintech company is an AI-driven lending platform, which is helping banks and credit unions to automate loan decisions. And the company is called Upstart Holdings. This is a massive growth company. It's forecasting 70% revenue growth and 800% EPS growth. And I know most of you guys already own SoFi, so this is a great alternative option to spread your exposure in the fintech sector. Knowing these revenue growth rates and EPS forecasts, you would expect that this company is trading extremely expensive. With a price to sales ratio of 7.8 compared to SoFi, which has a price to sales ratio of 7, it's actually decently priced. And you can just compare it here. Upstart Holdings expect the 800% increase of their EPS and SoFi only 60%. And the same thing counts for the revenue. Upstart expects 70% revenue growth and SoFi only 26%. And this company is just 2 quarters profitable. And the other good thing is that most analysts see it as an AI play that reduces bank labor costs and speeds up loan approvals. And a lot of these banks will have to start using this because first of all, they have to start competing with SoFi, which is operating already much leaner than traditional banks. And the big banks that will be using Upstart AI technology will attract more people to their banks because of the speed up and loan approvals. Just one thing to note is that the stock price did surge a lot the last 3 months. But yeah, you can definitely open a position in this company once the stock price dips a little bit more. AI stock number 3 is from the robotics sector, and it focuses on intelligent automation combined with artificial intelligence. And it's called DUOT technology. And the thing that's so bullish about this company, that it's recently expanding into data centers so that they can profit from the AI spend. Furthermore, DUOT Technologies has a price to sales ratio of 4.6, which is not that expensive. And that is because they're expecting to grow their revenue 140%, which is insane. Furthermore, they're also expecting an EPS growth of 40%. And because of this, analysts expect that the stock price will surge between 90%, and if you look at the bullish scenario, 120%. And even the bearish forecast, it still has a 70% upside. This is a very interesting AI company. Its main business segment is focused on real inspection systems, where they build high-speed cameras, sensors, and AI software. So when trains pass through at normal speeds, the system scans every container in seconds. The AI detects issues such as mechanical defects, safety, and security issues. The benefits are that it reduces human inspection time from hours to minutes, it increases safety, and is capable of detecting trespassing, theft, and suspicious behavior. And I would definitely start your position sooner than later. Now, stock number 4 is called Mara Holdings, and I will keep it short because this one is just a straight up buy. Because literally the only thing I have to show are these 3 stats, and then you will have it in your portfolio. The people that have watched until this point are the lucky ones. Alright, so the PE of this company is 13, keep that in mind. This company is already profitable. They are expecting that their revenue will grow 100% and their EPS 200%. Now somebody please explain why this stock isn't trading at a PE ratio of 100. Analysts also got their price targets really high, but I think it can exceed even the bullish case. The company is one of the biggest Bitcoin miners out there, but it's also one of those companies that is switching to the data center side of the business. Just buy at least some shares. The 5th AI stock is from the healthcare sector, and this stock is gaining some some nice momentum lately, but it's backed by insane growth rates and exceptional performance, because there aren't a ton of AI healthcare companies out there that perform like this stock, and it's called Tempus AI. A lot of you probably already heard of this stock, and that is for a reason. This company isn't profitable yet, but you shouldn't be too worried about that, because that's coming very soon. They have a price to sales ratio of 14, which is a little bit expensive, but just look at their growth rates. They are expecting to grow their revenue 80%, so there's still a ton of growth in this company. With an earnings per share forecast of 30% growth, makes this company just eating up market share. But the question is, what is this company doing that let this company grow 80% year after year? Well, this company is specializing in AI-enabled precision medicine, where it combines genomic sequencing with AI to better diagnose and treat diseases such as cancer, depression, cardiology, and infectious diseases, which are all massive markets in the healthcare. It's also making strategic acquisitions. One of these acquisitions was Embry Genetics, that was acquired for 600 million, which does genetic testing. The other acquisition was Deep6 AI, which is a clinical trial recruitment platform, and this company is backed by major investors such as Google and SoftBank. Furthermore, they have a 200 million partnership with AstraZeneca, and this is providing them with flexibility to invest in new products, acquisitions, and international expansion. So there's a lot more growth for this company, and it's a perfect choice if you want to expose yourself in the healthcare industry combined with AI.